Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today we're looking at Rigetti computing.
If you find our talks useful, please consider subscribe, like, and comment underneath.
And before we get into why Rigetti is making such crazy moves right now, I need to quickly mention VIP Algos.
Oh, right, yeah.
Yeah, so if you're trying to read these really chaotic trading charts, VIP Algos is a TradingView indicator suite that cleans up your workflow. It gives you, visual buy and sell chart alerts, trend direction tools, and it helps you map out support and resistance, plus take profit and stop loss zones.
Which is super helpful right now.
Exactly, and it works across stocks, crypto, Forex, all of it. But we do have to be clear, VIP Algos is strictly an educational tool. It's not financial advice. It doesn't place trades for you, and it absolutely does not guarantee profits. Trading always involves risk, so do your own research. The link is below in the description, and it is an affiliate link, so we may earn a commission if you use it at no extra cost to you.
Perfect.
Yep.
So, Rigetti, this has been a wild ride.
It really has. I mean, imagine waking up to the news that every encryption protocol guarding your bank accounts, national security databases, private messages, all of it has just been broken.
Wow. Yeah, that's a terrifying thought.
Right. And not by a hacker guessing passwords, but by a machine that can solve math problems in seconds that would take our current supercomputers like 10,000 years to crack.
Which is the whole promise of quantum computing.
Exactly. Whoever builds that machine first basically holds the master key to the digital world. It's a full-on geopolitical arms race. And that's why a company like Rigetti Computing has suddenly seen this violent 60% repricing squeeze over just a few days.
Because when the U.S. government decides it can't afford to lose a technological Cold War, the capital flows get massive.
Totally.
Yeah.
And Rigetti is a pure-play quantum architecture company. Right now, they're riding this $2 billion quantum funding wave, which is largely driven by the CHIPS Act.
All right, let's move into the wealth building context.
Yeah.
Because looking at this from a portfolio perspective, Rigetti is transitioning from pure R&D into initial commercialization.
Yeah, the messy phase.
Exactly, the very expensive, very messy phase. This is a highly speculative, multi-year, deep tech infrastructure play. It requires a ton of patience.
It does, but you have to view it as an asymmetric bet on a multi-billion-dollar total addressable market. I mean, the ceiling here is basically non-existent.
See, I always get nervous when I hear the phrase, the ceiling is non-existent.
Really?
Because my brain immediately flashes back to investing in the internet in, 1993.
Oh, right. The early days?
Yeah, the potential of the internet was infinite, obviously. But the survival rate for those specific early companies was incredibly low. Is this the same kind of thing?
That is actually a really fair comparison. Quantum technology will change the world, absolutely. But picking the specific hardware winner right at the dawn of the era is, well, it's notoriously difficult. You're swinging for the fences here.
So you have to accept that strikeouts are just part of this statistical reality of deep tech investing. This fits into a high-risk, high-reward bucket, not a stable income portfolio.
Now let's look at the fundamentals. Because if you're going to take that swing, you need to know what's under the hood.
Right.
So in the first quarter of 2026, they reported revenue of $4.4 million.
Okay, in isolation, $4.4 million for a publicly traded tech company sounds pretty microscopic.
It sounds tiny, yeah. But context is everything. That number is a spectacular 193% year-over-year increase.
Oh, wow. So they almost tripled it.
They did. And the driver there is key. It's driven by on-premises Novera QPU deliveries. Those are their quantum processing units and government contracts.
On-premises meaning they're actually shipping physical, highly complex hardware to clients. They aren't just selling cloud access.
Exactly. And their gross margins on that are sitting at 30%.
Which is solid for specialized hardware.
Very solid, with plenty of room to expand. But the real note here is their proprietary chiplet-based modular architecture.
Okay, break that down for us. What does chiplet-based mean?
So historically, companies tried to build one giant, flawless quantum processor. But quantum states are incredibly delicate. If there's one tiny microscopic defect in manufacturing, the whole chip is ruined.
I've always thought of it like trying to bake a pizza the size of a football field. You need the whole thing to bake perfectly all at once.
Right.
And if one slice in the middle burns, you have to throw the entire football field in the trash. It's a manufacturing nightmare.
That is the perfect analogy. So instead of doing that, Rigetti's modular architecture connects small, perfectly manufactured processor units, the chiplets, together.
Like baking 1,000 normal-sized pizzas and linking them up.
Exactly. If one is defective, you just swap it out. Plus, it uses superconducting technology that delivers gate speeds around 60 nanoseconds.
Which is fast, I'm assuming.
It's about 1,000 times faster than some alternative technologies.
1,000 times.
Yep.
Okay, that's a serious performance advantage. But we have to talk about the cost of maintaining that advantage. You mentioned $4.4 million in revenue, but their operating loss widened to $26 million.
Yeah, the R&D is aggressive.
A $26 million quarterly loss against $4.4 million in revenue is steep. Is this cash burn truly a land and expand strategy, or is it just deep tech hardware waste?
Well, you have to look at their fortress balance sheet to offset that fear. They have $569 million in cash and zero debt.
Okay, $500 million in cash.
Right. That means they basically have a current ratio of 7. It buys them years of runway to avoid the quantum winter.
The period where funding freezes up and early companies die off.
Exactly. That cash pile means they can survive the winter while their peers freeze.
That brings us to the catalyst timeline. Because even with cash, you have to hit milestones. What's coming up?
A lot. First, we have the August 2026 earnings. The market is going to look closely for sequential revenue growth there.
And on the tech side.
They're targeting 99.5% median 2-qubit gate fidelity on their 108-qubit system later in 2026.
Which essentially means the system can hold its state long enough to solve real problems without scrambling the data.
Precisely. And they're seeing international traction, too. There's an $8.4 million C-DEC contract deployment in India.
Showing global demand.
Yeah. But the massive macro catalyst is the $100 million CTS Act letter of intent finalizing into a binding agreement.
Right, the government funding. But I have to ask, as someone looking at the market, has the market already priced in that $100 million during this recent price spike?
Now let's pivot to the chart, because
Yeah.
the chart answers that question. We saw a classic high beta breakout running from $16.88 on May 20th to over $27 by May 22nd.
That is an explosive move. Usually those come crashing right back down.
But it didn't. It's currently in a consolidation phase in the mid-20s, holding that $24 to $25 range.
So the dip buyers are stepping in. They're establishing a floor.
Exactly. It's a very controlled push with tight pullbacks. The speculative retail money is shifting out, and sustained trend-following money is stepping in. Volume spikes correlate perfectly with CTS Act headlines.
Makes sense. And naturally, traders looking for those exact support zones or trend directions often use tools to clean up their workflow, like VIP Algos, which we mentioned earlier.
Yeah, exactly.
So what does market sentiment look like?
It's totally split. The market is bullish on the sector's long-term optionality, but highly cautious on near-term valuations.
Which you see in the analyst ratings. Rosenblatt Securities has a buy rating with a $40 target.
Right.
But then Zacks ranks it at number 4, which is a sell rating based entirely on value metrics.
Because traditional value metrics like price to sales don't really apply to a company building a brand new technological paradigm.
True, but there's also the insider flow. Director Michael Clifton recently sold warrants. He took about $500K off the table on May 21st and filed to sell another $156K warrants worth around $2.28 million.
Which sounds scary, but it's pretty normal for early deep tech insiders to take some liquidity after years of building, especially when there's this massive rumor circulating.
The sovereign re-rating rumor.
Yes. Speculation that the U.S. government's equity stake acts as a sovereign re-rating, implicitly de-risking Rigetti's survival.
Meaning the government won't let them fail, kind of like MP Materials or Intel. It makes them a safe partner for enterprise clients.
Exactly. Now let's talk about the risks, because they are very real.
Yeah, we can't ignore the valuation. The price-to-sales ratio is sitting around 244x.
Compared to an industry average of just 4x.
Exactly. It trades on pure promise. And there's dilution risk too, right?
Yeah, that $100 million GPS funding might be equity-linked, which dilutes current shareholders. But the biggest bear case is competition.
IBM.
IBM is dedicating $10 billion over 5 years to quantum, and they got $1 billion in CPS funding.
Right, so how does Rigetti, with $500 million in the bank, beat a Titan spending $10 billion? They're minnow compared to IBM.
It's not a zero-sum game. Quantum has massive applications. Plus, IBM anchoring the domestic supply chain actually reduces infrastructure costs for smaller foundries like Rigetti.
Oh, I see. IBM pays to build the roads, and Rigetti just builds a faster car to drive on them.
Exactly. Rigetti is agile.
So with everything on the table, what's the final verdict?
The bullish score is a 7 out of 10.
Okay, 7 out of 10.
Yeah, the stance is speculative bullish. It's a high-risk, high-reward play.
And what's the target horizon?
It's a multi-year hold, ideally 2 to 3 years, waiting for the 336 qubit Lyra system rollout and fault-tolerant maturation. Short-term swing trading on this is going to be highly volatile.
To summarize, it's a unique pure play entry with the fastest gate speed architecture, protected by a fortress balance sheet, but you're paying for it with stretched valuation multiples.
If they hit their modular roadmap milestones, a massive TAM re-rating is definitely possible.
But remember, this is an educational breakdown, not financial advice. Always do your own research. And if you need help charting out that crazy volatility, you can check out VIP Algos. It's a TradingView suite with visual alerts and TPSL zones. It's an educational tool, not financial advice, doesn't place trades, and carries risk. The affiliate link is in the description.
And if this episode helped you, please subscribe, like, and comment underneath. We'll see you in the next Smart Wealth with Joshua episode.
But before we go, think about this. If quantum computing breaks current encryption standards in the next decade, is holding a pure-play hardware stock the ultimate hedge against total cybersecurity disruption?
Something to definitely think about.